Assalamu Alaikum everybody, welcome back to the channel. This is Invest Academy. In today's video I would like to share with you 3 dividend paying companies that are currently undervalued. These are Sharia compliant companies that I have done quite a bit of research. I used a couple of apps to double check, and at the same time I do own shares in these companies worth over 2,000 something pounds. So alhamdulillah, I've been investing in these companies and I just want to share with you, just do a little bit of analysis, just give you the overview. Okay, as you can see, the first company we're going to look at is Merck. Merck is a pharmaceutical company, is a huge company in the United States and all around the world. They do things like, for example, cardiovasculars, type 2 diabetes, and many other products. Okay, and this is one of those really well-established healthcare company in the US and around the world. This company is currently trading at $82. Their stock market is open at the moment, so this number could go up and down. And for this year, they are 5% or 6% down. So what's happened is at the beginning of the year up until now, this company have actually underperformed the broader markets, basically including the S&P 500. At some point, this company were trading at $88.72. At the moment, they have PE ratio of only 14, and that is very difficult to find right now in this market because everything is overvalued. Okay, so PE ratio of 14 is great. Normally PE ratios are under 20 is excellent. Okay, so this is actually really good. They do have the dividend, which is about 3%. Again, excellent dividend company. So let's have a quick look at their dividend. So currently they are basically, the yield is about 3%. This is how much you will get paid every single quarter. If it's a year, quarterly, this is what you earn, about that you will get for every single share that you own. Okay, the payout ratio is only 43%, which is excellent, and the for the 5-year growth rate is about 6.5%. Again, that's on the low side, but again, for a company that's making really good profit and obviously trying to grow the company, that's excellent to see. And for the last 10 years they've been growing their dividend. So let's have a quick look in this. So as you can see, the last 5 years they have been actually growing their dividend every single year, which is again great to see. So let's have a look at how this company is valued. This is a website called Simply Wall Street, and I use this sometimes just to kind of look at some companies that are either overvalued or undervalued. And if you can see this part here, it says 42%. So this analyst on this website are actually thinking this company is actually undervalued, and the fair value for this company should be about $145 per share. Again, where it is now, about 82, 83, it's got a lot of upside. Okay, so again, that's really good to see. If you look at the past performance, okay, what you will see is in here, the Merck has a high quality earnings. So the last earnings was absolutely great. At the moment, it's about 44% net profit margins, which is great, from 20 from last year. So they're growing their net profit, which is basically what they take home after they paid all their all the taxes and all that stuff. Okay, and again, to see that, that's excellent. When you look at the past earnings growth analysis, okay, the company at the moment is 17.4. The industry, so the stable, the healthcare industry, you can see is 17.4. So it's it's bang on. Okay, and the market, you can see they definitely have overperformed the broader markets, which is again great to see as well. Okay, let's have a look at their dividend. We've already seen this part. Again, it's over 3%, which is great. And it looks like they should be able to pay this dividend without no hesitations in the next 10 years or whatever, because they have so much cash. Let's now have a quick look at their finances. So we're going to go back here, click financials. One of the things I normally look at when I'm looking at companies is their revenues. So you can see their total revenue for basically in the last 5 years. They've been growing it every single year. It's been going up. At the moment, it's about $46 billion that they made in the last 2019. 2020 should be released very soon. And then if you look at the other thing, I also look at their net income. Okay, so their net income. So yeah, by looking at their net income, you can see in the 2017 it went down a little bit, but then 2018 has gone up, 2019 has gone up, and as you can see here, 2020 looks like it's also going up by another almost $2 billion, which is again great to see. So when you're analyzing these companies, you have to look at the company's balance sheet to see if they're actually making profit. That is very important. A couple of other things I look at is to go back here, look at the balance sheet. Okay, and this will give you information about things like the current assets. So if you look at their current asset at the moment, okay, total current asset, you can see slightly declined in the last few years, but they've got about $27.5 billion of current assets. Now, the current asset is things that they can right now liquidate or sell, okay, in order to pay off current liabilities. So let's have a look at their current liabilities. Their current liability, total current liabilities is this. Okay, and you can see it's about $22 billion. So they should be able, in fact, the 2020 is actually $20 billion. So they should be able to pay this back, okay, with the $26 billion that they have. Okay, so again, that's very good to see. So in the next 5 years, 4 years, if the company runs into problems, then what they need to do is use the current assets, so sell whatever they've got in here and then use that money to pay off their debt, which is again great to see. And then the other thing that you need to look at the total liabilities against the total assets. So the total assets is about $90 billion, and when you look at the debt, total liabilities is about $60 billion. Again, very, very good balance sheet. So these are the things that I look at. This is a website called Seeking Alpha. So if you're interested, have a look at them. I'm not affiliated with them. I have just an account for free section, and I just use this to actually look at different stocks. Okay, so that is the first stock we actually look at. One of the things I'm going to look at now is the final thing I'm going to look at for this company is to look at Yahoo Finance. So Yahoo Finance is a great website. It gives you a lot of information about each company. You just need to put the ticker on the top and it will tell you a lot of information. So things like the market cap and so on. Okay, and the final thing I'm going to say about this company, two more things in fact I want to say about this company. The first one is at the moment what the analysts are saying is a hold. Okay, which means basically, buy, which means everyone agrees this company is fair valued at the moment and is a buy, which is, in fact, it has the analysts are saying it should go up to 96 or even more than that. Okay, so if you buy this, I've bought and I think I've got about £600 worth of shares at the moment in this company. At the moment I'm up, I think, about 2-3%, which is great. So alhamdulillah, it hasn't disappointed me at all. So the final thing I'm going to show you, because I have had quite a few questions asked about how I actually look at companies' finance, is I use the Zoe company, but the app. But at the same time, the one thing I've learned from that app is to actually be able to do the calculations myself. So I listed the next time I see a company, then I can value it myself. So you've got the capital structure in here, you've got the market cap, and you've got the total debt. So what you need to do in order to figure out what the company, how much debt this company has, if it's over 33% or 30%, whatever you're comfortable with, this is what I do. So 28 point, so the debt 74 divided by 212.57. Okay, so that will give you a number. Obviously you need to times it by 100 to find it out, the percentage. So at the moment their debt value is actually quite low. It's about 13%. So 13% is excellent. Anything above 30%, 33%, then that's basically in gray area. So again, it's up to you what you're comfortable with, but this is what I do. Okay. All right, so the next company that we're going to look at is KBM, or Kimberly-Clark Corporations. This is one of those companies, I'm sure you've got some products that belongs to them, belong to this company in your household at the moment. If you look at this, If you go to their website, you will see all of these products and more. They've got plenty of products. So what they normally tend to do is they purchase other companies that sell the similar type of products, so they have actually kind of monopolized this market. So if you look at your household at the moment, you will see a tissue made by this company or other products that they've made. So if we go back to Seeking Alpha, what you will see is if you go down, scroll down here, basically you can actually see all the types of products that they sell. So manufacturers and markets, personal care, consumer tissue products worldwide, and it operates through 3 segments. So personal care, consumer tissue, and KC Professional, which is, you know, again, they've got all of these brands that I've actually shared with you now. Okay, so these are basically some of the brands they own. So let's go back again. Let's have a look at their financials. So at the moment they're down by 3%, so they're underperforming the current markets. Okay, and at one point this year this company was trading at $156. At the moment it's down. At the moment, this is one of the companies where I think I'm down about £70 or something like that, but I'm not really worried about it. I've done my analysis. I'm happy to, comfortable to hold this company for another 5 to 10 years. If you look at the PE ratio, again, under 20, 17%, perfect. You've got dividend yield of 3.25, which is excellent. Market cap of almost $45 billion. Really big company. When the lockdown happened, this is one of the companies that made money very quickly. They were selling all this tissue and everybody was growing those tissues. So again, it's really good company to look at. So let's have a look at the auto investing. Okay, so every share that you own, you will get this much, okay, for every single year, but quarterly you will get about that much, which is again great. They're spending about 55%, just a little over 55% of their basic revenue to actually pay off their pay the dividend. Now they're not growing it as fast as I would like, but that's fine. But they have been paying their dividend for the last 48 years. Okay, so let's have a quick look. And as you can see, if you even click all, okay, then this is what you will see. Beautiful. Since 1992, look at that. It's been growing every single year. It doesn't go up as much as the other companies, okay, but at the moment, I'm happy with that. I'm definitely happy with that. Okay, so let's have a look at the valuation. So at the moment, according to Simply Wall Street, okay, the company is undervalued. It should be around $187 fair value. Okay, again, really at the moment, I'll be honest with you, I have been adding to it, basically just bringing down my overall values, basically just bringing it down as much as I can. So every time it goes down by at least 1%, I buy just a little bit. Even if it's a fractional share, I'm buying at least £20, £30, £40, whatever I can at that moment. I'm doing that. Okay, so the next thing we're going to look at the past performance for this company. As you can see, their earnings has been absolutely brilliant this year. They've got about 12.5 net profit margins, okay, and basically compared to last year where they made actually about 11%. So they are growing, and obviously, like I said before, they're growing their dividend slightly. It's not the greatest, but they do pay really good dividend in comparison to the market. So this is the company at the moment. So in comparison to the market, okay, they actually are 3.2 is higher than the bottom 25% of the dividend payers in this US market. Okay, again, excellent. I'm happy with that. Okay, the final thing we're going to look at for this company is the Yahoo analyst. So what they've said is in recommending trends is at the moment 2.6, which is a between hold and buy. Okay, but I will definitely say it's a buy for me anyway, because I know what the company stands for. I know what they've been doing, so I'm quite comfortable buying it low, and hopefully will go up in the next few years. I don't care how long it takes, but I will hold on to it. So average is about 150. Okay, so that's what they're saying at the moment. So it's 130 at the moment, so it could go up to 150. Again, if it goes back to that area, I'm absolutely happy with it. So the final company that we're going to look at is 3M. 3M, I am 100% sure you have some sort of a product that belongs to this company. So let me open up their website. If I can find it. Here we go. Okay, look at all these brands. I'm sure you come across at least posted brands or command brand or any of these brands. They have loads of products, and if you scroll down, you can see they basically deal with all sorts of basically industries. Okay, whether it's energy, electronics, design and constructions, they have something to do with that. Okay, and they are, when it comes to the healthcare, so if you go to the healthcare recently, I think the one of the masks that has been used, actually they're the ones that who created that mask. And if you go to their website, that's actually the main thing, that if you go to their main website, you will see that's one of the things they actually advertising at the moment. So yeah, they are a really huge company. So let's go back to again, if you need a bit more information, please just go to their website, have a look around before you invest in any company. Okay, or this is what I do. Remember, I'm only sharing my journey with you so far. And what I'm trying to do is show you a very quick research and basically very quick video to like what I normally tend to do. But I try to basically spend a few hours here and there just to look at every single company from every single angle before I actually invest. So have a look at their website. If you're still not too sure what 3M does, just go to their website, have a look at the some of the products, look at some of the companies they deal with. They actually are suppliers to a lot of huge companies out there. So have a look at that and see if that's a trend that's going to carry on in the next 5 to 10 years. And if it is, perfect, then you put your money in. Okay, so let's have a look at the financial side of things. At the moment, they're down about 4%. Okay, 4.5%. Okay, from the year basically. And at one point they were 177, which is quite good. Now it could potentially go back up there, it could go down. I'm not really sure what's going on, but at the moment I think it looks like it's basically, there's something happened yesterday, and because of that it kind of is having really bad day today as well, which is fine. I'm not selling it. I'm going to hold on to it for a very long time. It pays very good dividend, and obviously it's a stable company, even though it's one of those companies where if the market, see, everybody is happy, right? In the economic side of the world, if something is happening and everybody's happy, everybody's going to the shops buying product, this is one of the companies that that benefits. If things are not going well, is one of those companies where it's not priority, and because of that there's no need for certain products. Okay, and because of that it tends to underperform, and I think this is what's happened to the company this year, because their products are not like a life or death kind of situations apart from the masks. So apart from that, I don't think they've actually performed well this year for that reason. So I don't know, inshallah, we'll see what happens. But anyway, when it comes to their PE ratios, is actually down, basically less than 20%, which is great. The yields are over 3%. Again, that's a really good thing to see. And obviously their market cap is closer to 100 billion. Okay, really, really good. Now, the other thing that you might need to look at is their dividend, which as a dividend investor, you might be interested if that's what you want to do. So now when it comes to this is not bad. So up to 75% of payout ratio is okay. This is how much they will pay you every single share that you own, more or less. So it goes up, down a little bit here and there. And for 62 years, they have been growing their dividend. Okay, let's have a look here. Can you see that? So since 1992 all the way here, just like the other companies that we looked at, Kimberly-Clark and so on, they have been growing their dividends for a very long time. Again, that's very good to see. When we talk about this shows me the company has money, they're making profit, and they're sharing that profit with the investors. And that's what you want. When you invest in a company, you don't want to invest in a company that's not making a profit. Okay, even though the stock is down, I don't know, 4%, 4.6 this year, they are still making profit. Okay, and that means because of that they will pay their dividend. They will pay basically the dividend every single year and basically every single quarter and increase it. So that means the company has a good balance sheet, and that is the good thing about investing in companies that are that pay dividend. So let's have a look at the final thing. So when it comes to valuation here at the moment is undervalued. Okay, and apparently it's supposed to go up to the fair value is 209. I'm not sure about that, but we'll see if it goes up to that level. Perfect, I'm happy with it. Okay, and like I said before, their dividend, you know, is really good, and in comparison to the market, basically to the market bottom, they are overperforming, but the market top slightly lower, which is absolutely fine. I don't mind. You know, anything above 3 is absolutely perfect. Okay, I hope you enjoyed the video. Please, if you lasted this long, please can you subscribe, share with your friends, comment in the in the comment section. Let me know about what you think. Inshallah, I'm planning to do more videos of this kind of things. And remember, I'm only doing analyzing companies that I have already invested in my own money. Okay, I'm not going to tell you to invest in a company that I think you should just invest for the sake of it. I actually own over £1,300 worth of 3M shares worth of 3M, and I'm quite happy with that, and I am planning to add to it. So when I tell you these things, it's not just something I want to just tell you, oh, go and buy this product, oh, go and buy this and that. That's not what I'm doing. What I'm doing is I'm just sharing with you my journey, and hopefully you will enjoy and hopefully learn something from it, and hopefully it will be a little bit educational. The websites that I'm using to analyze, I'm going to put it on the inside, under the link, so have a look at that, under the comment. So have a look at that, inshallah. Let me know what you think, and please share, subscribe, let me know. I want to grow this channel. I want to help as many people as I possibly can. Again, I'm still learning, I'm still learning. I have got loads of books that I've been reading in the last few years and months and whatever, that I will put those in the link. So get started, get yourself the Intelligent Investor book, get all the other books that I've recommended, and use that to your advantage. Watch as many YouTube videos as you possibly can. Teach yourself first before you start putting money in, and then start investing. And inshallah, Allah will make it easy for you, as long as your intentions are correct and you're doing something halal, and you're not dealing with some sort of day trading and spread betting and all that crazy stuff that happens at the moment. Okay, take care everybody. Assalamu Alaikum. See you next time.